Good morning. How's everyone doing today? Doing well. How are you? Feeling any better? Yeah, a bit. Yeah, and the fever's gone. I've gone from having a runny nose to just concrete in my sinuses, so that's been fun. I haven't slept a lot. I've been busy. It's been a busy weekend. Okay, I'm not your guy's dad. Okay, stop wishing me happy Father's Day. You have more children than Elon Musk. Jesus Christ. Okay, get it out of your systems. Happy Father's Day to those of you who've decided to have children. Um, Congratulations on that. I hope they leave you alone for the day and your ultimate wish comes true, but it sounds unlikely. This is the first weekend stream I've ever been able to comment on. Welcome aboard, Crippled Mule. I hope you make good use of it. I'm not coming to meet you in Long Island, Rims and Sims. You had to know the Happy Father's Day comments were coming. Honestly, I didn't expect them until I woke up to an inbox full of DMs that said, Happy Father's Day, Dad. Most of you are older than me. And science has gone too far. And have your own fathers. I could be your only son if you had a kid at like 10 years old, but I didn't. I wonder what the average age of the pickle jar is. It's like 35 to 50. People with money to blow. The Pores channel's 24, and that's why we find them all so insufferable. I'm 13. Well, I don't know what Russia's laws are on investing. But congratulations. I assume your father is some sort of oligarch. I started trading at 5. It's a good age. I'm familiar. Why aren't you good at it yet? Thanks, Aurelia. I appreciate your maturity. I'm gonna stay mom on the daddy stuff. I don't need to open that can of worms. Excellent choice. You are special. All right. We got a lot of work to do today. It's a really unimportant week coming up with very little data and a holiday. But we do have SLD and something else. I don't know what. Feliz Dia del Padre. God damn it. DFE joins the board tomorrow. I don't know anything about that. I managed to 8x my GME position in 1.5 months swing trading shares. Well done. Can you discuss the CFTC? What, like the positional report that I post in the SPX channel? It just tells you where positions were added and pulled. It doesn't necessarily affect things. It just gives you some insight into how people are positioned on those things. Based on volume, likely RC added to his stake in GME already. I'd like to see an SEC report that would confirm that. Otherwise, no. Yes, retail sales are on Tuesday. They will matter. We'll get into a little bit more why later. But retail sales, industrial production, probably going to be very important. Manufacturing production. We have an absolute fuck ton of Fed speakers this week. They've all been chomping at the bit through the blackout period to get their speaking fees, and now they're finally ready to realize them. Their real salary. And so I think we kick off the week with Harker and Cook, and then just literally everybody every day for the rest of the week, just talking incessantly. We do have building permits this week. Housing has not been doing very well over the last two reporting periods, so some of that may be important. And I think we're gonna wrap up the week with S&P PMIs, or well, yeah, I think manufacturing and services PMIs, which are being projected to fall, but have been unusually hot. Can you play Vega positions on SPY? Yes, you can. They're not as good, but you can. They are roughly 1/10. Sometimes you have to get a little bit closer to the money, but they are drastically cheaper. I'll take the Happy Father's Day wishes for you. Yeah, they're all yours. It's my birthday as well. Oh shit! Happy birthday, Windmill Willie, father trader. Well done. How do you keep your kids away from you on your birthday? I don't know. Is that something? I feel like that's something fathers want for Father's Day. Father trader, absolute degenerate. Who won the spy forecast contest this week? I don't think anybody did. We were just so far off that I'm pretty sure none of them actually count. Did Dork maybe? Dork might have been the closest to spot. Yeah, but only just off by $100. I think we established in a prior week that if we're more than like 50 BPS off, it doesn't count, but I don't remember. We really should write the rules down somewhere. I think more importantly, we just didn't go down. despite having kind of an inside day on Friday and never really closing the prior gap, which is interesting. What are Vega puts? They're puts with a lot of Vega. I wish they were more complicated than that. It'd sound cooler to talk about. What's up, Poopy? Do what? They're both with their mom this weekend, and they'll be back here when I'm done feeding me barbecue for dinner. It's actually great. Oh, okay. Well done. Draw the diamond top. Do it. I won't. I won't draw the diamond top, and I know you want me to. I think Popcorn already alluded to it at one point. But yes, there's a diamond top, unfortunately. I haven't gone over GME. I haven't gone over anything. Diamond top, same as diamond hands. Oh boy. I guess we could start with GameStop. We're still not getting an excessive amount of shorting. Friday did double test the $30 mark, and support continues to persist at the $28 and $25 level into this week. However, sold calls have been increasing, and IV has been declining. And yes, before you even say, but IV shot up on a bunch of contracts into the end of day on Friday. That's just settlement. It's not a big deal. You don't need to make a thing of it. Um, Basically, your broker is just mispricing implied volatility at the end of the day. Realized volatility has continued to move up. So I think end of day Friday, IV30 at like 200%, HV30 at 392%. Which is interesting. Generally, in periods where GME's historic volatility remains high and yet implied volatility falls, you know, that reverses. And when it does, when historic volatility finally does fall over the 30-day period, um, we generally have kind of like an upside move. It's a really good time to buy like leaps. Not yet though. IV is still extremely high, but when it does eventually fall and historic volatility finally flattens out, that can be that period can be a good time to buy leaps. That's not right now. For real though, seems like we're at a point, if not very close to where we get a legit melt up or crash in the coming months. Your thoughts? Or if I'm lost in the sauce? I don't necessarily think you're wrong. Bulls did manage to break above that short call positioning, but the short call positioning is still there, and it's still dragging down on price a lot, right? So, we got that overnight gap up, and we managed to hold it for the rest of the week, just barely. I don't know how much longer we're going to hold it for, but if we do fall to the downside, there's just no support anywhere. Um, and yeah, we have those CTAs who are kind of like max long already. They're more than willing to just start dumping bags, and if they dump enough bags, they really might just dump all of them. And so, yeah, I would say that there's definitely a heightened risk. Skew's been kind of blowing up lately. So that's something to keep an eye on. Correlation relative to volatility or dispersion relative to volatility is at like all-time highs. Higher than like Volmageddon and the COVID crash even. So that's kind of crazy. We're definitely, I mean, I think everyone has like a really good sense of that right now, is that we're in a really weird spot on the indexes. Like there's no breadth on every time frame is declining, right? So if you look at like equal weight S&P on like the 250 20-day moving average, all of them are just bleeding, right? Yet NQ keeps making new all-time highs literally every day. I don't know how long that deviation can sustain, but yeah, we have no breadth supporting the market at all. Anyway, we'll go over all of that when Doric and JFresh and everyone hop on. Um, we did end the day Friday on GME with a little bit of negative arbitrage that's unresolved. In the early part of the day, we did resolve a bunch of the arbitrage. We got that run up to 30, came crashing back down, and then we got some kind of aggressive short action that didn't really lead to anything. But yeah, we did move down and retest. What was our low? Like 28. Or I'm sorry. That's intraday. 2750. Found support there. A little bit more arbitrage got resolved, but not much. And I think in after hours we came back down again. Yeah, that's what it looks like. So, I mean, there's still a lot of short vol that's very close to being exposed at the $30 strike. Those options have been sold out all the way through. Oh geez, I got 30. Pretty much sold at every expiration out to 2026. Um, there's very few time frames they don't exist on, but a lot of them are for this coming week. I would say of the total OI, like 70, well, let's say 57,000 of the calls sold are for this Friday, out of 92,000 total on the chain. So about 50% of the short calls at the $30 strike expire this Friday. But there's something interesting about that, and this is something that drives OPEXs, right? Is that on OPEX, when if those calls expire out of the money, the negative hedge being held on those calls will fall off. As charm decays into close on Friday and then completely on Monday when those calls are no longer present. We're still getting plenty of short puts being sold to the downside of $20. It seems that bulls on GME, or institutional bulls at least, are still pretty confident this isn't going anywhere below 20 anytime soon. Delta's been decaying off of the chain, but like total Vega risk is remaining pretty elevated. So we're getting both longer dated short puts and longer dated short calls, which does leave us kind of prone to having another run, right? Now the question is, with settlement between the next settlement period between the 18th and 24th, and then additionally the holiday this week, we may not get a very standard OPEC settlement next week, right? Things may continue to be deferred out, but I mean, so we have settlement from the 18th to the 24th, but we have a holiday on the 19th, right? And that's going to defer out any settlement that would occur on the 18th through the 21st. So this will get moved out to those settlement dates. Oh, wait, you guys can't see the epic pen. Hold on. Uh, 23, 52. Aha! I found it. And so this is a fun series of events. And I think anything deferred from Juneteenth. Let me double check the schedule here. So the Juneteenth holiday deferrals look like all settlement from the 19th. Is moved to the 21st. Okay, yeah, because T1 now. And then, yeah, those would start to be settled out in the middle of July, around the 12th through 16th. Juneteenth created solely to defer June OPEX and obfuscate runs. No, but the effect is there. Settlement deferment holiday equals wait for IV to settle and get well, here's the thing though. Juneteenth doesn't push out all of the 4210 F6 settlement, right? It actually only stops the settlement on the day of the holiday, right? And most of the settlement prior to that period um, concludes between the 18th and 24th, regardless of the holiday. So there's no settlement on Juneteenth, obviously, but the prior settlement shouldn't get pushed out again, right? Because it's already 42, like it's already at the end of the period in which it can be deferred. So stuff that's still in the Reg T portion that can be deferred out. But anything that would have been settling from prior settlement that had already been deferred doesn't get deferred again. In 2024, products on these OCC holidays will have their expirations moved to the preceding or following OCC business day. 1 115, 219, 329, 527, 619, 92, and 1225. Okay. I mean, I think you're going to find that a lot of those holidays aren't necessarily on Fridays. So I think the effect is pretty inconsequential. I think May 27th was on Monday, right? That's just indexes basically. 619 is a Wednesday. September 2nd is a Monday, and Christmas is on a Friday. Or wait, no, Christmas isn't on a Friday. Christmas is on a Wednesday. I'm excited for NoPEX. May Pickle Jar return to its original darkness. That sounds most likely. The only confidence I have in it is that there are a lot of short calls that are going to be falling off of the chain, and short puts keep building, right? And remember, when short puts build to the downside, it pulls the market maker's hedge down, and breaks to the upside of positive delta, positive gamma, tend to be bullish. Which is the situation Jimmy's in right now, right? Jimmy has positive delta and positive gamma, which is not something you generally have following a run on GameStop. People are already blaming me for what DFV did. So yeah, I'm pretty ready for it. Any reason I shouldn't sell $30 CSPs for 621? You don't want to buy GameStop at $30? Are you gonna play and GME weeklies? Any GME weeklies just in case? I may get some new positioning, although the last one didn't work out that great. I think I just like broke even on it all. So, eh, maybe I will. Maybe I'll get some like debit spreads or something. Or if calls get cheaper, I'd be possibly interested, but not particularly. You manipulated DFE into selling calls. There we go. Well, a deferral in the Fuck you, popcorn trader. God damn it. Anyway, yeah. So, kind of range bound, but possibly a break after the end of the week or into the end of the week as the $30 position decays out. Um, if we make it above the $30 position at any point, that could prompt a run. Although over the last 3 breaks at $30, all we've seen is more $30 calls being sold pretty aggressively, especially when the premiums on them are high. So um, I don't know if we're gonna have the momentum to shake off short vol at any point, but they do expire next week, a large number of them, and that could benefit price action. Um, Upstart still looks like it's kind of going down. Nothing special there. If it gets around $20, I might start selling some CSPs on it again. But it's very liquid. The sell off here has been largely just a sell off, not shorting. And that means when shorts do come in, they should have plenty of liquidity to bring the price down without creating another run to the upside. Fubo looks boring. I hope at some point it gets under $1. Although earnings are coming up, uh, well, not anytime soon. I don't think we have to worry about it. Top's just going down. Beyond not on reg show. Beyond looks should get back to, I don't know, like $5 or something. High $5 range, I would say. Should still be possible on this. We don't have any near term covering coming up. Although liquidity got kind of blown out, and there does appear to be some ETF covering going on. So it may be that if indexes continue higher, we get some sort of price action on this, but I think it's going to continue to fall. GoEV had some interesting shit happen at the end of the week. They got $15 million on a pre-sale, like a pre-agreed upon sale of shares at $2.30 a pop. That brought price up. Started pushing us into the 250 range. After testing 250 a little bit, we immediately got shorted down to like $1.44, which was fucking kind of crazy. That happened very very quickly, like a few candles. It bounced back into the end of the day, but it was unable to regain two. Sometimes this could be an indication of covering. That's why I bought some leaps on it when it kind of crashed. Because sometimes they'll short really hard right before they cover, and if that's the case, we may see a little bit of covering on this. It's seen a little bit of covering after the short already. We can see the tips are kind of crossing over here on the 1 hour, but not quite on the 4, right? But they are contracting, which is a good sign. Obviously, a bigger contraction could lead to a larger upside move. There are still a lot of sold calls at 253 and 350 on this, but a significant number of those will be falling off this Friday. And if we are prepping for a period of covering on this, it may start to pick up some cyclical activity. It is a very profitable volatility short, and it has just been added to the Russell 2000, which will make it even more attractive to short volatility on. What if DFV moved OPEX? How? Is everything people want GME to be? What? What's everything people want GME to be? Options expiration or operating expenditures. It really depends on how you capitalize it. GoEV, is the Fed a bank? GoEV is nothing like GME. At least not yet. The Fed is a bank. It's the bank's bank. GME doesn't run when no one expects it. The $80 run, it ran more than people expected, but it didn't run when nobody expected it. The sheer amount of bullishness on GME seems ripe for the harvesting of tears. Are people bullish again? That was because DFV showed up and squeezed out all the short calls in the middle of what would have just been a very standard run. Hopefully, he just keeps doing that from now on. I also read on Twitter that Elon is a genius. That couldn't be wrong. Shiba is our currency. Really? I heard on Reddit that it was Doge. I heard Doge to 50 cents end of year. When the infinity pool is realized, who will be the best financial institute to get a loan against my forever shares? Okay, so moving over to the Mag 7. Apple still looks pretty strong this week. Some resistance is built at the 215 level, but it is still very well supported at 210, and calls continue to come in at 220, and a bit at 225, but not too much. Obviously, this is benefited greatly from their non-NVIDIA reliant AI that they intend to implement on all of their smartphones for the people that have decided to upgrade to the newest Apple phone, which is not very many. They will get to enjoy these new features, such as AI generated emojis and important things like being able to tell Siri to schedule something on their calendar, but now with AI. Anyway, extremely bullish. Definitely worth a half a trillion in market cap that they've picked up over the last couple of weeks. And honestly, like the Apple chain still looks extremely supportive. I believe Gamma Max is just out of the money at 220. We did break through Gamma Max last Wednesday, very briefly, and tested 220, and Gamma Max has since moved up just a little bit. And I would say things still look pretty bullish. There has been some profit taking. Delta on the chain did drop into Friday, and total gamma exposure fell a little bit. However, I don't see anything really weakening here. So Apple still looks pretty strong, still pretty advantageous for bull puts, and a little risky on the call side. You could play short dated calls, but you really need to be kind of in and out of them, because as it tests those upside resistances at 215, maybe 220, it's probably going to continue to have very sharp rejections, which kind of makes it shitty to stay long, because the price action is probably going to be like that a lot. Um, so I've just decided to sell bull puts on it. That's what I did last week. I'll probably do more of that this week. As long as 5210 remains unbreached, that's a level that I don't mind selling them at. Yeah, you could also use spreads to mitigate risk if you don't have the margin leverage, to just sell straight up puts. Is the resistance at 215 partly because they blew through Gamma Max? Possibly. Yeah, there's some sold calls that have been slowly building at 215, but they're not very strong yet, and it could still break out and retest 20 again. Don't forget, point out grammatical errors in emails. Oh yeah, I forgot. So instead of the prior predictive text things we now have it plus AI. And AI stands for Apple Intelligence. Yeah, so you did mention that XLK is rebalancing. So Windmill Willie brought this up. I guess a lot of people are very interested in it. XLK is rebalancing. Um, this coming week, and they need to add like $26 billion in Apple shares, or that's about 0.0008% of Apple's current market cap. So that might be good for like 5 to 15 cents in the stock price. Um, Something to keep an eye on. If they nominated you for chairperson of the SEC, would you implement T plus zero settlement? No, I would just have zero settlement. All trades settle instantaneously. $3 trillion is an ungodly amount of money. Yeah, it makes $26 billion seem like a very small amount of money. Is the current price or KView a good entry point? Well, I'm clearly doing the Mag 7 right now, but I'll put KView over here, and we can talk about it in a minute. Next up, AMD, although technically not part of the Mag 7. We're gonna talk about it anyway. Now, AMD did get a small bounce off of Gamma Neutral on Thursday, although that doesn't seem to be leading to any actual price improvement. And we have a fairly decent number of puts at the money and out of the money, as well as calls at the money and out of the money. And AMD looks kind of range bound between 55 and 65 right now. I don't particularly think any of the positioning on it is overly bullish, but on a break of 65, it could test 70. Um, at the same time, on a failure of, or well, a significant failure of 60, like let's say it gets below 157.50, it could drop as low as 145. So yeah, it's kind of at like a pinch point here. There might be an argument that a straddle is worthwhile, but I can see an outcome where it just trades flat. Um, Total like dealer delta exposure has been really flat. Gamma's been really flat. And this has been going on for like over a week now. Uh, I would say that as short calls continue to accumulate at the $60 strike, it's going to become even more likely that it fails. But if you wanted to go short on it, you would probably need a bit of theta, or you would want to wait for, a breakdown at like 157.50. Next up, Amazon. That's completely fucked. Let me look over here. That seems to be on all time frames. Interesting. Well, that's got to be something wrong with the IV. Okay. Yeah, Amazon's been pretty flat as far as accumulating interest. Some of the bot calls have fallen off on it. Gamma and Delta have both been flat for a little over a week. I do realize that it fell pretty hard last Thursday, but recovered a little bit on Friday. It does look like there are some out of the money calls up to about the 190 strike. So it's got about $7 of range to the upside going into this week and seems to be moderately well supported at 180. So Amazon looks like it could be bullish. I think 185, breaking above 185 is pretty important, but even if it does, the range is somewhat limited. So this might be worth like selling puts on, like I guess you could try to play the long side, but it may struggle with the $85 resistance. And with SLD, that may be kind of dangerous as we get into the middle or back half of the week. So I don't particularly like this one. I haven't liked Amazon for a little while. It's been kind of dull. Um, there's just not much downside interest either. So I would say it looks a little bullish, but maybe not worth playing the long side on. Uh, Thanks, Carl. Happy pre Father's Day to you too. All right, Google. Google looked a little bit bullish last week, and it actually did recover a tiny bit on last Friday. Um, it's about at the top of its call interest right now. Yeah, there's not much to the upside of 180. There's a little bit of call interest building at 185. And there's some longer dated stuff at 85 to 90, but not a ton. And I think this is getting pretty close to its all-time high. Yeah, so all-time high was like 183. Um, I would say that this is in a good position to possibly fail. Um, I don't know where it could fail to. I guess back to 160 would be the most likely target. That may not be in the early part of this week, however. It could take some time for us to get to a failure on that. We've got gamma neutral and delta, so still very well supported by the market maker. There's just not been a lot of additions to gamma or delta here. So yeah, all right. So Google's got a little bit of bullish momentum. It may get another breakout at 80. But I do think whatever breakout it gets is probably going to fail just due to the lack of out of the money positioning at these prices. Um, with the market maker hedge being so bullish, though, I would say it's maybe not worth shorting, even if it does fail. Yeah, yeah, I don't love that. Probably just won't touch it, honestly. Yeah, yeah. Google looks not worthwhile. Meta actually looked pretty good last week. I want to check it again. There was a decent uptick in Delta, which fell off at the end of the week. And there was an uptick in Gamma, which also fell off at the end of the week. So the weekly's expired, pulling back a little bit of the bullish positioning here. Um, hmm. Yeah, so Meta's still very well supported at 500, but just no interest really to the upside. Big put wall came in at 525, which seems to be. What expiration was that added for? Some longer dated positioning out at like 550, 600. Nothing shorter dated. So yeah, there's a little bit of range on Meta from like 505 to 520 on the upside. However, if it loses 500 to the downside, where it's got primary support, it could fall as low as 480. before running into the next level of much stronger support. So very strong support at 480, weak support at 500, and weak upside positioning. Hmm. Meta could be good to sell calls on at the 505 level. Um, but you have to be very careful of like a pullback to retest the trend. So you would want to close them early in the week on profitability, and you probably wouldn't want to hold them through the week unless Meta lost 495. So if it falls below here, then it could be worth just staying in the short calls. But yeah, there's a chance it bounces and moves back up, which would be very risky. So that might be something you could do there. I don't think I'd play puts. If it broke back above 505, so if this reversed sooner, at 505 you could go long and target a test at 520. And I would probably look for an entry on the retest of that trend there, if that was something I was thinking about doing. But still kind of divided. Most of the Mag 7 have looked kind of shitty lately. So Microsoft looked kind of bullish Friday morning, mostly because of the overnight drop, which fully recovered. I don't think there's a ton more positioning to the upside here. But there's a little bit of call interest at 45, 50, and 60, most of which is further dated. So not a lot expiring this week on the OPEX. Delta has been picking up though. A little bit of gamma fell off on Friday, but not very much, and bot calls have been rising. Uh, I would say maybe the biggest issue here is that gamma max is at 550, so that kind of limits the potential upside range to about $8 to $12. Microsoft has broken through gamma max before, but it was pretty brief. So I wouldn't imagine it would have a lot of sustained price improvement above 450, but 420, 442 to 450 looks pretty bullish. So this one doesn't look too bad. Needs to pick up delta though. There's not a lot of gamma supporting the move. So the breaks at each of those major resistances are going to be important, like 442.50, 445, 40, 447.50, 450, right? Because you want the delta to pick up on those longer dated calls that would be driving price action versus just approaching those strikes with gamma. But yeah, it looks a little bit bullish, not too bad. That might be worth a shot. Netflix making yet another new all-time high. I should probably continue out that trend. Um, could reject off of this. I don't see a ton more out of the money positioning on it. I think Gamma Max is Still kind of high though, 686. Um, Hold on one second. Refresh that. Now, there is call interest that goes out all the way to 700. And some of that's also on the weekly. Yeah, so despite hitting all-time highs, Netflix still looks bullish as fuck. Um, there's a pretty significant amount of call interest from like 675 out to 690. Most of it this week, so there's a ton of gamma. The downside of 670 seems well supported. In the money calls from 650 all the way up. And 670 is also a huge support level. So if this breaks above 670, it could run like another $20 up to 690. Let me draw that line here. So this actually does look still extremely bullish. And I may write this one up because that's quite nice. So I'm gonna go out here to the 1 hour. Yeah, so a small initial rejection on that trend test, which could develop into something more if it loses 670. But if it's able to hold that level, which it does actually look like it moved back above 670 in after hours, I think there's plenty of support for a move up to 690. So that one's kind of nice. Risk there would probably be at like the 665 mark. So I guess you could go 667. Seems that most of that upside call interest is for this week's expiration. There's a little bit out on June or July at 700. And then there's a lot more at 700 for September, October, December. Whoa. Yeah. Yeah, that looks like it's gonna keep going. So quite a bit of room there. I guess you could decide how much theta you'd want on along with that. Remember, Netflix is super volatile, so it's generally not something I like to stay in for a long time. But that's some undeniably bullish positioning on it. Yeah, it doesn't matter what I put it on; it plays on. Like I have ads turned off right now because it's a member stream. They still play them. You might just watch mini streams that don't have monetization. Could be the sports deal. It could be that, there's quite a lot of high expectations surrounding their upcoming earnings. They're estimated to make 470 a share. A little bit of a bump from this quarter. And 9.53 billion in revenues. So I think it could be both, especially given that some of that bullish positioning is out in like July and September. I'm sure some of it is for earnings, right? Thanks, Trash. Nvidia. This is the one everyone wants to ask about. What the fuck? Oh, because these didn't split adjust. Excellent. Okay, so can I just trash all of the drawings? Yeah, there we go. Now everybody and their mother has hopped on the bandwagon here because Nvidia split and they can finally afford to. However, there's quite a lot of sold call positioning at 150, 135, and 140. Um, the move up to 135 has some interest, but breaking out above 135 is going to be a bit difficult. I would say things overall still look pretty bullish here. There's not a lot of put interest, and there is at least a decent amount of call interest throughout the next like 4 months, between spot and 140. Um, Quite a lot of calls in the money between 120 and 130 as well. Not a significant number of puts building up anywhere, but um, you know, remember how short calls kind of accumulate on major strikes on Nvidia, and it can get kind of range bound for a while. Also, the fact that Apple's not going to be using any Nvidia chips could be a bit of a detractor, especially if any other competitors announce, their own AI models that are not going to be using NVIDIA chips, right? Less and less reliance the market perceives. Possibly the worst for NVIDIA, but I don't see it falling from these prices, at least anytime immediately. Um, the dividend is now paid out, so that didn't seem to offer much of a pullback. Earnings isn't until August. The remainder of the prior chain is starting to become more illiquid as those are exercised off. 1 second. Yeah, so a decent chunk of the in the money call positioning will be expiring during OPEX. I guess we're just going to keep an eye open for a decline in volatility there. Right now, historic volatility is very elevated, although I don't think that's split adjusted. And IV is still picking up a bit. So we'll see how that looks after OPEX. We'll start to see if implied volatility begins to fall. Remember, post split, we should expect price improvement for at least some period of time. And then, once those in the money calls start to fall off and they're exercised out, you'll open up a little bit more range on the price. That's usually, well, at least statistically post split, when you see some sort of like correction in the price. Nvidia, very honestly, could be insulated from anything like that because it's just so wildly popular. But we are, like I said, we are getting a lot of sold calls at 135 and 140, and if those continue to accumulate, they may have some negative effect on the current price. There's no other setting. That's just one setting. It's just this. Just there's nothing else. Anyway, so yeah, looks like Nvidia's got about $3 to the upside. This has been a good day trade target as well, with support at 130. If you're able to catch calls on a drop, it can be kind of nice. And also, this is supporting the entirety of the S&P single-handedly on its shoulders. So, kind of still pretty bullish. Tesla got some kind of bad news into the back half of last week, despite a bullish reaction to Elon Musk getting paid more money. Um, there was a huge miss on auto sales for China, and that has led to Tesla falling back below gamma neutral, where there are a significant number of out of the money puts, from 175 all the way back down to 150, with about 165 possible just on the OPEX expiration puts. Now some of those may be sold, but that doesn't really matter if they go in the money. And gamma neutral on Tesla now at, let's see where it landed after Friday's expiration. Yeah, 179.64 with a loss of delta neutral at 172. So this could be a good opportunity to short Tesla since it has fallen below gamma neutral. Looks like it's very much on course to fall below delta neutral. Total dealer delta has been falling off, and dealer gamma slipped just barely negative on Friday. Now, sometimes this is like a bit of a reversal point, but rarely. Um, so I'd be focused on that 172 level and a breakdown there, which could lead to a breakdown as low as like 150, maybe even lower over time. And I think that is about it for the Mag 7. Okay. Were there any other questions? I know somebody asked about GoEV, FSLR, and Enphase. KView. All right, so let me cover KView first. So KView is back near its low. Consumer durables have been getting hit a bit lately, as has manufacturing, industrials, utilities. It's one of the sectors that doesn't tend to do very well when markets are super bullish. So yeah, I do think this isn't a bad price. Definitely willing to sell CSPs at $18. I still like the company. I still think it's a bit undervalued. And don't forget, it's sitting on that nice yield, which is now at 4.43%, which is uh, pretty good, honestly. Enphase and FSLR have both gotten hit pretty hard recently. I believe Enphase rejected off of Gamma Max last Wednesday, on its high. Has not fallen below Gamma Neutral, which is at 120, and should have some fairly decent support at 125, or it did. Not too much. I'm picking up quite a lot of puts into the end of the week. Most of them expire this Friday. Okay, so we got people piling into a correction here. There is still call side support at 125, but less of it. And there are puts below 125 targeting a test of 115. So I would say, that this could continue to break down. I would probably want to confirm the loss of the trend. But if it fails the trend here at like 122, right there, I'd probably go short. It looks like a good short opportunity down to about 115, which is, roughly here. It's not a ton of range. It's like $7. I guess you could get in before that, but riskier. Um, but yeah, on a break of the trend, it looks like a straight shot to 115. Might go further. I will see if FSLR is in a similar position. Yeah, so FSLR hasn't quite picked up the same amount of put interest, and is still very well supported by those long dated calls at 270, 260, and 250. Some puts have come in, like 72 down to 60, but not nearly as many as on FSLR. Not to mention, on any bounce, there are still a shitload of calls to the upside. Um, Very specifically at 280 and 300 on FSLR. So this one looking quite a lot more bullish than N phase. It did reject off of Gamma Max on Friday. Gamma Max is at 296 now. Um, and some of the call delta, it looks like, and some of the gamma did fall off, but there are still quite a lot of long dated calls at 270 and 260. So um, at least one very near term support, and then I would say if it loses 270, it might be worth trying to short down to 260. I think if it loses 270, maybe I'll sell some calls on it, but still support at 270. So 270 support. Oh, son of a bitch. $270 and 260. So support at both of those levels. And then, any bounce could go back to 280 or 296. It's quite a lot of range at the top here. I think the 270 test is kind of a given at this point, and then look for support. If it gets support, might be a good opportunity to go long on like a retest of the trend here, 80, 82, and then see if there's a continuation to the downside. But yeah, still very well supported at both the 270 and 260 levels. I don't know about OPEX runs. It's not usually a thing for FSLR, but some of the short calls that came in at like 300 and 280 do fall off this week. So that could drive a little bit of price improvement. Would FSLR breaking down also get a sympathetic response from N phase? Yeah, they're both pretty tied to each other. I feel like if FSLR loses 270, then N phase is going to lose that 122 level. So you kind of run into the same opportunity on both, right? You could short FSLR down to 260, or you could short N phase down to like 115, where the put interest ends. It just seems that people are more aggressive with the put interest on N phase than they are with the put interest on FSLR, which is understandable. FSLR is a, like, It's like kind of trying to play sympathy between Nvidia and AMD. Thanks, Big Dill Danionaire. Would you mind doing some TA magic on ZOM and talking about oil? Well, I mean, we ran into a position last week where CTAs were basically net buyers on WTI and crude. I still think they have like another like 15 billion in allocation. That's probably going to continue to drive positive systemic improvements on oil futures. But indexes haven't been tracking so well, and energy's been underperforming. So, crude prices aren't the only thing that influences the price of, ZOM, right? It does have some correlation with crude prices, which keeps its beta fairly low over time. However, if indexes are dropping substantially, especially the energy sector, I mean, like, if we look at S&P, right, and then let's go like 1 week performance, energy and minerals has just been fucking wrecked, right? So, um, I don't see any reason this wouldn't continue to be shitty right now. Like, financial conditions are easing, right? Everyone wants to pull their money out of their safe energy bets and dump it into tech. And so that's not going to correlate with the price, the rise in oil prices. And that's why I like resold the covered calls on ZOM, right? Because I think it's going to keep falling. It's not magic. It's just, I mean, I feel like you're digging too deep for the correlation there. Also, oil prices are kind of just back to where they were. They're not higher, right? Now say oil hits 81, 82 a barrel, or it's like light crude and WTI futures hit 81, 82. But actually WTI is probably 85, right? So like light crude 82, WTI 85. That would probably start to reinvigorate energy again. But right now, everybody's money is going into tech and tech services, right? Any thoughts on GoEV? Yeah, I went over it earlier. Yeah, that seems reasonable. Seasonally, oil should start to push up into the end, like starting by the end of this month. And then we've already got like strong systemic flows. So I think yeah, by like mid July we should probably be at a fairly decent price per barrel. I would say at least 80 or higher futures. I don't care about actual spot price. So we could spend a moment talking about EPAM, but oh shit. Did I go over my time again? I did.
It exists. Oh, we can talk about it later.
What's up, Gurk?
Hey guys, sorry I went over a little bit, but you guys can go over AVGO and fucking EPAM with me if you want to, or just
Yeah, go for it. We were talking shop.
Talk about more butt stuff. I mean, whatever floats your boat.
I mean, pretty much. When you really boil it down, yes.
Have you guys been discussing the cloaca sex toys?
No, we were talking about AI.
Oh, okay.
Yeah.
Yeah, that's
I mean, when you boil it down, yes.
So yes, we were.
Yeah. So AVGO kind of maxed out on Thursday, and then somehow managed to find an even higher high on Friday. But some of the delta did finally fall off from the MM. I know a little bit of gamma fell off, a bunch of charm, and like I think it was like a quarter billion in charm, and about half of that fell off into the end of the week. Um, it's illiquid enough that I don't know how important the options chain is here, but as important as the options chain is, it's blown way past the market makers' need to hedge anything at this point. So I would say that some kind of pullback should probably be expected, but you may want a lot of time for that. Maybe like, well, not a lot of time, but like maybe like 7 to 14 days. And you want to be careful what level you try to short it at. Like I wouldn't want to short it if it was below like 1725 because there's too high of a chance that it could bounce again. But if you're shorting near 1740 or 1750, that seems like it could be advantageous.
Why is it going up so much?
They like sort of beat a little bit on earnings.
Okay, so it
And
still
they
needs.
they guided up, and this is like the second tech company to guide up for next quarter besides Nvidia.
Okay, so it's
Yeah,
it's primarily hype.
yeah. I think revenue increases were only 3.5%, and earnings
Yeah.
increases were sub 1%. So it's a lot of it's just exactly, yeah, a lot of it's just hype. And if it loses like it has a tiny bit of support up here at like I think 1725. Hold on, let me double check and make sure nothing changed on Friday. But I
I mean,
think I
it's
think it doesn't
possible.
it
I mean,
doesn't have a lot of support.
I'm
Yeah.
betting there's just idiots buying. So I wouldn't try to short it because people are just buying shares. I'm sure because they're like, hey, they got it up, and I want shares of things that guide up, and so they're just buying it. So it seems kind of dumb to short.
Yeah, it does in a way, but it's also, massively above Gamma Max. Like the MM like the Vana hedging is like pretty blown out.
Sounds like a
Um
great place to sell calls, if anything.
yeah, it could be. Yeah, from like 45 days out or something like that.
Yeah, I mean, even if you don't have shares, you could just do like a bear call spread and get away with it probably because yeah, it sounds like it's not going to go down. I don't know about up, but probably not going to go down. At least
Well,
not significantly enough to pay for your puts, right?
so Gamma Max is still at about 1600. Um
Is that smooth or unsmooth?
huh?
Is that smooth or unsmooth?
Oh, good question. That is smooth.
Yeah, look at the unsmooth for the current day. So 1705.
Yeah, so 1705. But I mean, I guess it's catching up to spot a little bit, but it's still way above it, right?
Yeah, it's just so hard to because if you look at another thing I like to look at is like just the total amount of delta that's on the chain,
Holy
and
shit.
like all these, like you look at Nvidia, you look at Avgo, you look at like all these AI people, and the delta's just going like vertical.
Yeah,
And
well, so a little bit of that broke down on Friday. The question I think is, does it
yeah, very
continue to
teeny
break
tiny
down
amount.
next week? Yeah, yeah.
I mean, the fact that it's only Gamma Max that's going up like that tells me that I mean, people are buying shares, and then you got a bunch of degens buying out of the money calls.
Yeah, and those were mostly at 1750 and 1800. So there's still a lot of interest. I don't think it gets much higher than 1750 right now because from like 1750 to 1800 there's very little interest on the call side. So rejection at 1750 could be like a retest of 17 and then like closer back to gamma max. And then maybe a move up from there as like more positioning comes in,
Yeah, that makes sense.
which is a $50 move. Like, well, on a test of 50, it's a $50 move. So
Damn it! It really did move. Should.
yeah. So AVGOs, I mean, when options are liquid on AVGO, it's great if you can catch something like that. But in one day, it's more than capable of testing 1705 and then moving back to 1750. So
Yeah,
you gotta really be on top of it because it's a dangerous play, but it can be pretty good.
yeah. I'm just concerned about the long interest. Like this strikes me as the thing where it's just going to kind of chop in this 1800 probably to 1700 range, and just you know bump around and probably increase sensitivity to other tech company earnings too.
Well, I don't think there's
Uh,
anyone left. I think they're like about the tail end of the tech earnings now.
right, but
I
it's
think
the
like
next earnings
95% of the S&P is in a blackout. So we shouldn't get any till the start of next earnings season with like when we start getting the mega caps again.
Right.
EPAM I did want to discuss. Have you guys looked at the options chain on that?
Yeah.
Uh
I haven't looked at
so
shit this week.
so call interest on EPAM has just fucking exploded. But there's still a lot of puts. Um I don't really know how that's gonna work out. But yeah, it's picked up a ton of call interest over the last week or so, like 180, 185, 190, all the way out to like 210. I know earnings isn't coming up for a little while, but there's a lot of speculation right now that the Russia Ukraine war is going to um, come to a standstill. Currently, Putin's offer is let us keep all of the stuff that we took and we'll stop bullying you. Um,
Nice.
I don't think that's an offer that Ukraine can accept, but like there could be international oh, they have to also drop their application to NATO. But if they do both of those things, if they let Russia keep like Donbass and Kherson and all of that, and give up their application to NATO, Russia says they'll do a ceasefire.
Well, that's basically all that's
Oh
saying is
wow.
Russia is saying, "I want you to guarantee that we can invade you again when the conditions are better."
Yeah, so it's kind of like if you had like a bully and they beat you up every single day and took your lunch money, and then one day they came up to you and they were like, "Hey, this is really wrong and I don't feel good about it. So, how about every day you do all my homework, give me all your lunch money, and I'll just stop beating you up."
Pretty much.
Yeah.
Do you think all those EPAM calls are sold? The ones at like 210 and
Well,
250?
so they came in over the last like 5 days.
It's only
And
like
I feel
100.
like if they were being sold, they would have come in closer to the drops or like when price action was stagnant. Um, so I think they're bullish. I also think a lot of the puts are sold as well.
Yeah, could be.
Um,
Yeah, and it looks like the bulk of those are dated for July 19th, so they're expecting a move soon.
yeah,
If
yeah.
they, yeah,
It does seem like the majority. Some of the 200s and 210s are out a little further. But yeah, like the stuff nearer the money, like the 180, 185, 190s, those are pretty short dated. So I'm thinking if there's any kind of talks about a treaty or peace settlement between Putin and the Ukraine, EPAM's gonna fucking rock it because it's massively undervalued. As far as like it's like software as a service and tech services go, like it's currently trading at a PE of 25, and they haven't missed a fucking earnings in like over a decade.
I mean, it looks to me,
Even the
yeah.
most recent one they beat on, right? They just like they guided a little lower because they're still wrapping up operations and moving more. Also, they've already moved a lot of their, and this seems to be something the market's discounting. They've already moved a lot of their operations out of Russia and out of Ukraine already, right? Into like Western Europe and into the US. So they don't have that much exposure anymore to anything that's going on there, but the market's still treating it like it's the stock that's tied to all of this. And yeah, I guess that makes sense because it's one of the biggest ones. But um,
yeah, seems like a great a great spot for someone to slip in early and wait for the sentiment to adjust.
Yeah, I've been buying some Julys at like 210, but I also have some leaps and stuff.
So
Um,
all those calls at 210 for July 19th are you.
no, but
So they're long.
enough of them are that I could say that they're probably long. I made a ton of money off the recovery on this. Like I don't know if you guys remember, but back in like 2022, the
I
price,
remember you went through an EPAM phase. I didn't really
yeah,
follow it.
it was pretty long. So back in 22, when the war started with Ukraine, EPAM went from like 700 a share down to like 150. And then I was like long as fuck EPAM through most of 2022, and I think it got back to around like 450 at one point, which is $300 a share is not bad. They didn't have options at that time though, so it was all just.
That's okay. So I was remembering correctly. I was like, I thought I remembered you talking about EPAM before, but I didn't remember them having options. I thought, yeah.
So they had options for a little bit, and then the options chain got canceled, and then more recently they brought the options chain back. So yeah, I mean right now it's got options.
There you go. What more could you ask for?
Well, like, are we talking like Kevin
Wait,
Spacey canceled or like Louis C.K. canceled?
are they possibly going to go bankrupt soon? Because then it'd be a slam dunk for Pickle Jar.
No, I don't think they're going bankrupt.
No. Well, they can't all be perfect.
Yeah.
Yeah,
I
July
mean, yeah,
210 OI is about 700.
they're trading right at GN, and they've been trading right at GN for looks like about 3 weeks. So I don't know. It's acting as a support, but I feel like if EPAM fails GN, yeah, it's gonna go down a bunch.
Probably, yeah.
So risky play. I mean, it seems like a decent straddle play with considering the positioning you're talking about. There's also a bunch of puts on the chain down below. Like what? Like was that like 150 or something?
So those have been accumulating too, and I think they're sold.
A price action tells me otherwise, but all right.
I mean, if you pay me enough money, I'll run the time and sales. Give you an answer.
I'll pay you $0.
Sold.
Damn, that
Nah,
was
just
quick.
I'm just kind of out of bandwidth right now. Got to get all this on the server.
Dude, yeah, it's
So much work to do still.
I know, right? Fuck.
All right,
I'm
so
like,
I posted a bunch of macro charts.
Oh,
I
uh-oh.
went nuts on the macro charts today. We got all kinds of stuff.
Where? Oh, are they in the chat? Where are they at?
They're in
oh,
the chat.
they're in
Yeah.
the big
Woo!
chat. Look
How
at
do you
these things. What
slip
do we
all
got?
those in there? Holy cow! What? It keeps going.
Yeah.
He did these in the morning. What are you doing here in the morning? Ew.
You were in here by yourself posting charts.
Yeah.
Doing preparatory work.
Yeah,
Wow.
so
Look at you, Gert.
we would have charts for the stream.
Ugh.
Yeah. Cool charts at that.
You know,
Ooh.
the stream used to be a lot better when we spent 45 minutes talking about my pool. Now we talk about the stuff people want to hear.
We could talk about your pool. I didn't know we'd talked about anything people wanted to hear. Pretty
I
sure we
mean,
just got done talking
there's.
about EPAM for like 15 minutes.
I mean, you know that like 100 people in here are gonna go long EPAM tomorrow morning.
They're gonna lose all their money.
Yeah.
Yeah,
Well, they'll learn, right?
I suppose.
They
If
won't.
there's anything we found out in the last 3 years is that people very quickly will learn and adjust.
Brandon Dale is demanding your thoughts on GME this week.
I literally don't care.
Uh,
I do not care at all. You could not say anything that would make me care. You couldn't give me one bip of caring about GME. I don't give a single rat's fuck about that goddamn stock. All right, if they go and buy some fucking little tech company, then okay, I might be interested. But until that happens, I do not give one single fuck
Dork,
about
dork. There's no forward guidance at this time.
it. All right, then there's no forward fucks given at this time either.
Yeah, I mean,
I also hate GME.
yeah, I mean, here's so I I here's how I feel about GME. It's become a pump and dump, right? I mean, there just really isn't short interest on it anymore to the degree and at the price levels where anything catastrophic can really occur. So it's really just driven by sentiment
Well,
and
hold on.
how much
Andrew Left shorted it at $60, and he's losing everything.
he's already
Good for
out.
him.
I know he's out. He's also only worth $21 million. Who the fuck gave a shit about that guy in the first place? He's just like loud and on Twitter, but his assets under management are a joke.
Anyway, so GME no longer a short squeeze play, like that. All that's gone. All you have now is pump and dump sentiment, and there's a lot of bag holders. There's still a lot of holders. They held through 80 again. It's like, oh my god, like just like look at like Mr. Gill's portfolio. He's obviously been trading the stock, right? I mean, your cost basis doesn't go from like 50 cents to $23.
You
when
fucking shell. How dare you?
when like all of your net worth is wrapped up in GME, so how do you like get more GME at a higher cost basis when all you have is GME without selling it and trading it? He played with options, he rugged everyone with the options, got even more shares. He's trading the stock and you're not. You're holding it through every single pump.
Well, I mean,
So
that's what allows him to trade the stock, right?
No, DFE's not bag holding.
No,
is no. Somebody said, so you think DFE is bag holding? No,
Oh,
DFE,
don't listen to Magnanimous. He's an idiot.
DFE's worth like $250 million right now, isn't he?
He's trying to buy Tesla at 100 before it goes to 10 million a share.
Anyway, no, Keith is not bag holding anything. Keith, even if GameStop went back down to $1, he would still be a multi-millionaire. Yeah.
He's wheeling the shit out of that stock.
He's arrived. He's gotten to the point now where he almost can't become poor, right? I mean, it would be actually very difficult for him to impoverish himself at this point. If he did it, I would be probably more impressed that he did that than what he's already done with GameStop. So no, he's not bag holding. He's trading it, and he's traded it much better than you. Anyway, so where do we stand with GME? You're going to get diminished returns, right? People, Roaring Kitty's back. He's already tweeted a bunch. People have already got that, hit, that high, that bump. And every time he tweets, it's going to do a little less and a little less and a little less. And people are going to run out of a little bit more money and a little bit more money. And we're going to go right back into what has already been happening for the last 2 years, which is just slow down for forever until it's, valued at what, the majority of the market thinks it should be. So, yeah, I don't know. I mean,
I think most of the pickle jar is concerned with are cycles back.
No.
And is GME a value proposition from the yield standpoint? Will IV remain elevated for an extended period of time?
No, probably not. I mean, if it does, trade it. If it doesn't, then don't. I don't know what else there's to say. It's going to depend on how much money people have to get back into options. But like that big position, it just isn't there, and I don't know that they're going to come back now.
Ooh.
Pretty much.
Porsche just let me know that I'm pre-approved for auto financing for up to $125,000.
Cool.
What car are you gonna buy?
I'm not.
I don't know, man. There's a Lambo on it.
What are we gonna do in it though?
Oh, what aren't we gonna do in it, bro?
All right. I guess I could. I'd have to sell some treasuries.
That's
Is the
fine.
Lambo gonna pay me 5%?
Well, if you do Uber in it, maybe.
Ooh, smart.
You
You
do
should
Uber
buy
Premium.
you should buy a Tesla, because those are going to be robo taxis, and that will make you a multimillionaire just owning a Tesla.
Yeah, when you're not
You'll be at
driving
the
your Tesla, you can
grocery store, and Tesla will be like, "Oh, someone needs a ride," and it'll just strand you there. But you're gonna make so much money waiting for your Tesla to come back to get you.
yeah, like $20.
Yeah. So in terms of GME, I mean, I said it was gonna run because Keith heavily like skewed the options chain, and it did. It got
Literally
to
blew it out. He
like
literally
30. What did it get to like 32 or 33, something like that. Could it go back there again? Maybe. I haven't checked, but since he closed all that stuff, the options chain probably looks like garbage again, if I had to guess.
so it's still really well supported at like 25 and 28. Keith's not alone, right? There's a lot of institutions in on it. We're still getting a lot of short puts, which is weird, right? But short puts have been staying very elevated and largely below like the $25 strike. Um, and that's kind of maintaining some support even with Keith's position gone. But Delta's been declining, Gamma's been declining, Vol's been, they just never stop shorting Vol, right? Like as long as the market's open, they're just selling calls all fucking day. And that's having its effect.
Yeah,
But
well,
but
maybe.
but
Yeah,
those short calls will fall
there's
off, right? And that'll cause a spike, and that spike will drive IV and open up opportunities to sell more calls. So I gotta disagree that there's no value in the yield and selling the vol on it. I don't know how much value there is in going long on it. I've tried going long a couple times throughout this whole thing, and I've made like a little bit of money, but I've made way more money selling puts and calls.
Yeah, maybe I'll take that back. Looking at the chain, there's still a lot more open interest than I thought there would be, especially at 30, which is probably sold. I don't know. I'd have to take a look. But yeah,
I
the
mean,
25 and the 20s are bought, and there's still a lot of them. Yeah, so I
considering
mean, maybe back to 35, 37 if it
considering
really goes, but otherwise,
considering
it's
that
just gonna.
during the DFV stream, all GME did while he was on was limit down halt over and over again. I think a lot of those calls are sold.
Yeah, they are.
Yeah,
They're
at
they're
30.
very very heavily sold, but about 50% of them fall off on Friday, which is, I don't know if you remember, but that's how we used to get OPEXs once upon a
Yeah,
time.
it's kind of bullish. Yeah.
Yeah. So I told everyone earlier, if it holds 25 and the 30s fall off at the end of the week, it's got a good chance at like a little run. I don't think it'll be as big as the prior two, but maybe like Jay Fresh said, like 35, 37. It's really hard to spin up that Vega risk again, though, that drove the prior two runs, right? Where we get like over 40 and the long dated sold calls start to get hedged really heavily, right? Like we need IV to spike so fucking hard. And you need such a like big volumetric move to the upside that it seems nearly impossible. And we're not in that weird spot anymore where we're like over gamma max the entire time, right? Like gamma max is starting to move more in line with where we expect it to be. The options chain's now less bifurcated because DFE's position's gone, right? So now we just have like one gamma max instead of two. Um, yeah,
Well, plus we're no longer like there's not so much like weekly interest at $60, right?
yeah. A lot of
Yeah, I
that's
mean,
gone.
I would say anything over 35 is probably a gift at this point. Just take it if you need it.
Yep.
Otherwise, who knows, right? I mean,
if at the money IV stays jacked, I mean, there's a case to be made that you can wheel it effectively, but it's just tough to.
I mean, that's clearly what DFE's been doing this whole time, right? Like,
Well, now he's got IV at the money at what, like fucking 300% or something,
so
or
if I
what is
just
it,
like
200?
if I'd like full ported GME all through 2022 and 2023, I would have made a fuck ton of money. I don't have the risk tolerance for that. Like his
Well, especially
positions
when the
are
price is as big as they
insane.
were, like, getting
What's
blown out on that would just fucking suck.
yeah, yeah, fuck that.
Exactly. But I expect this to get fall shorted into the dirt again. I mean, over time, that will lead to. I think that there will be some cycles because of that. Because, like you said, when those short calls fall off, you get that little bit of a bump from the market maker deleveraging the hedge. But just like previous cycles. I mean, the thing is that there's enough people who know about it now that if you're doing that, you're probably going to be trying to counteract that in some capacity, and you'll end up with more Brex Day-esque price movement, or like the day where it moved up to like $68 in free market and then just went straight down.
That was a rough
Like
day.
that. I think that's how it's going to work. I think that's the most effective way to do it. If you're the market maker, just fully deleverage in pre-market and then shorts roll in just and fade the top like hell before open, and then nothing really changes and people lost a bunch of money on fucking IV crush.
Yeah, yeah, that sounds about right.
So it's safer, right? If you especially if you're like the type of size that can move, a stock, then that's the way you'd want to move it.
I mean, I feel like it's our responsibility to once again say the thing that nobody wants to hear, which is that Kenneth Griffin has made far more money off GME than DFE ever has.
Oh yeah.
Yeah.
he loves the volume, man. Just keep buying them.
Yeah.
Buy, buy, buy. Oh, you don't care what price it is? You just want one? I can work with that.
Oh,
Dude,
I do
during the
see.
first and second run, people were just buying options like weeklies, out of the money weeklies at the ask on like stagnant price action. Just fucking market orders of like 100 blocks of 50, 60 calls. Honestly,
Yeah.
like retail buying out of the money garbage calls probably did more to stuff the run than the share offerings. The negative charm was so fucking bad. um
Yeah. No, yeah, it's ridiculous, and I don't. That's why I don't care, right? I don't see any way for me having a small port, and I don't have a bunch of GME shares. There's no way for me to make money off this. But if you've got like 1,000 GME shares sitting around, you could probably yield off those for a little bit while these cycles go on. But I mean, I wouldn't be expecting calls to prompt to the moon on this. And if they do, and you make money on it, then great. But to me, that's it seems like statistically going to be a losing proposition.
Yeah,
Unless,
it's going to require nuance and skill. It's not just YOLO and wait for tendies.
yeah, next weekly's on OPEX, yeah, that's stupid. But I mean, if GameStop, like I said, if they acquire somebody and do something with that money, even if they just honestly, if they just literally did nothing but buy, like, and roll 3-month bills with that money, I mean, think about how much of their operating costs would get just eliminated by that. Like that's the the share dilution and all that. It is accretive, right? And if you are a fundamental believer in GME, and people like, and this is the duality of super stonk, right? You got the people who are like, I'm in it for the company, and then you got people who are like, I'm in it for BOAS, and it's like, and so when they did the share offering, got a bunch of people who were butthurt, and it's like, if you really do believe in GME and whatever thesis there is left, I mean, you should be stoked that they just did a massive fucking capital raise.
Yeah,
Like
yeah. I mean,
it's an unbelievable amount of money they just got.
yeah, he's got 4 times the amount of money to do nothing with. So I no, I mean, legitimately though, $1 billion wasn't enough to accomplish anything, right? 4 billion might be enough to accomplish something.
Yeah.
So we'll see what he does. I mean, I have no interest in participating in the experiment, right? But I mean,
It would
I'll
be
gladly
great.
sell Bull's calls.
It would be great as a public company if he came up with a plan for that money and shared it with people.
Oh, you mean like disclosing things to his shareholders?
Yeah.
Or
Uh,
like guidance. Dude, forward
Yeah.
guidance. That's crazy, dude.
that's
Why would
something
you
that's something for non-Sigma male Chad CEOs that aren't walking directly in the footsteps of Warren Buffett and Steve Jobs.
exactly?
When you're the next Steve Jobs, you don't have to tell anybody shit.
Yeah, dude, that's the thing. You speak
We all
softly,
know,
very
no, 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 no. We all know that the next Steve Jobs is the
Jensen
dude
Huang.
from, no, the dude from the Rabbit R1 company,
Oh,
the large action model. That's the
yeah.
next Steve Jobs.
What's his face made a
Innovating. You know,
uh,
the guy who made the rabbit is actually the next Steve Jobs.
Yeah.
The rabbit AI pin.
No, no, no. Rabbit's the little orange, not a phone, second phone. The other
Oh,
popular.
okay, yeah. Sorry.
No, Humane AI. That's no. That he wants to be the next Steve Jobs, but he wants it too much. Um, no, the Rabbit guy's actually insane. He started like a crypto scam before this, and actually used the same company. I think it's an LLC, but used the same corporate structure that was running the like metaverse crypto scam to pivot into the Rabbit. Like he didn't even create a new company. And yeah, the thing is only it debuted and it's only supposed to do 4 things. It like orders DoorDash, Uber, and something else, and it doesn't really even do any of those things because it's just a ChatGPT wrapper and a really crappy piece of hardware.
so there's a really good breakdown by the one guy who like he sort of he does like investigative journalism on crypto scams and stuff. What's his name? He like it's like in a futuristic bar. Um, but anyways, he did a breakdown like that on the
I
rat.
truly have no idea what you're talking about, but please continue.
He's super popular, and he popped into my feed, and he was talking about the rabbit. I was like, ooh, so I looked at it, and he bought one, right? And there's like video of him just like he said that he was using it from like weird locations because it was so untrustworthy. But there was like videos of him like trying to use it to do things like he was like, "What is there to eat around here?" And then it would like tell him locations of restaurants in like a city in a completely different state than the one he was in, and shit like that.
That sounds really
Like
useful.
So like
yeah, and
So basically Siri.
worse. Yeah, it was terrible, and the security on it is terrible, and his whole summary was basically it's just a giant fucking scam.
Sounds
And he
about
Yeah.
reached
right.
out to them.
Anyway, I don't know that people necessarily want us to go on another tirade about AI, but I do like that we've successfully pivoted away from GME and propose that we find a new topic that's
Yeah,
not GME.
yeah, I agree.
I think we've said everything there is to say about that.
The
I think
same.
so too. And I'll continue to provide updates on GME for like the rest through OPEX, and then I'm done with that. So don't expect me to keep fucking doing that for 2 hours every night because it's boring.
There's so many wonderful stonks out there.
Yeah, yeah. I mean, AVGO's up fucking $300 a share in the last week. FSLR ran at the same time as GME, and it ran more than GME did. Why the fuck does everyone just care about GameStop?
The media kept telling us to forget about it.
Yeah, I know, right? It's like, why does nobody listen to what CNBC is telling them?
If you want everybody to get into FSLR or AVGO, even more than they already are. You need to get everybody on CNBC to say you should not be in this company.
That's how we start the conspiracy.
Yeah.
Shills. Yes, we are. Kielson, welcome to Zillionaire. I'll play you a song, but not right now because I'll pull up everyone's eardrums. All right, so yeah, let's get into macro because it's getting a little interesting, right?
Getting
We've
fun.
we've
Everybody's my favorite thing about macro right now is that it's all noise. So first, I'll just say, the first thing you should think when you see any macro data and people talking about it, the first thing you should think is this noise or is this signal? Most of it's noise. And so I'm having a lot of fun watching people just absolutely freak out
yeah.
interpreting noise in the way that they choose to interpret it. But anyway, go with that backdrop, go ahead.
Well, so something that's not noise is that we have kind of a weird spread going on between French oats and German buns. Something I mentioned earlier last week before it really came to a head, but it started to come to a head going into the weekend. And we're getting a big flight to safety from international investors into U.S. Treasuries, which is driving yields down and pushing an uninversion of the curve. And this is because France has Macron has decided to host kind of elect like a surprise elections in an environment which may drive the left-wing party out of office in France. And France has some debt issues and everyone's kind of freaking out about it, and this is coming right on the back of the EU cutting rates, right? And so we're getting this like huge arbitrage in like the two largest some of the largest bonds in the EU, right, between France and Germany. And this is driving a flight to safety response into US bonds, so once again, for the 12th time in the last 3 years, we are facing a once in a lifetime economic crisis, um, and a foreign bond market. And this looks a lot like the prior EU debt issues, right? It shares a lot of similarity with the last big scare that happened in that space. And we'll see how that shakes out. Obviously, that's gonna be pretty interesting over this coming week. But on the U.S. side of things, we also have two inflation reports, which were wildly off target, right? With CPI coming in at literally zero, and PPI also being seasonally adjusted into the dirt. Um, Yet, it doesn't appear that inflation expectations or break evens are changing in response to those reports. It does appear that seasonal adjustments were way too harsh, and I don't think anybody actually believes the inflation report anymore. And so, I mean, for all intents and purposes, it looks like the bond market's largely ignoring like the quote unquote positive inflation data. Um, so I think we should probably talk a little bit about that, and then I've got a whole bunch of data um, dealing with the consumer current index pricing. We can get into that in a minute, though.
Yeah, there's a whole bunch of stuff to go through for sure. So in terms of your oats and buns, your breakfast cereals in Europe, I don't know about any of that. So,
Oh,
but I do agree that somebody's flying to bonds in the U.S. And it doesn't make sense to me. I mean, if you're in the U.S. and you primarily work with U.S. currency, I see no reason to buy bonds. Seems ridiculous, but for a short-term play, it could be interesting if they keep buying.
I mean, the ECB just cut rates. I mean, if you're looking for a higher yield, I mean, now there's the
Yeah,
U.S. plus there's dollar dominance too, right?
yeah,
So that's kind of the thing, and I think that there's some of that, and I think Dirk is right that Macron, the political craziness he just committed, is definitely introducing risk aversity into at least the French market. Like their equity market dropped like what was it, like 10% or something over the last like week. So there's definitely some fear in the French stock market, but globally, I think that fear is relatively subdued. But
Yeah.
if there's a spread between the German buns and the French crepes or whatever they are, then I think that the German bond market is a little bit more important than the French one, and the spread between buns and treasuries is something more worthwhile to watch. But now, you're looking at a very subtle sort of, downstream effect of global liquidity at that point. Because Germany's economy compared to France's is way bigger. But yeah, I don't tend to look at that stuff too much. It's a little above my pay grade. But that's where a lot of the interest in U.S. Treasuries. I didn't watch the market at all last week, but
So
if you look
basically,
at
what happened was Macron. Let me try to break it down so people kind of understand the situation a little better,
that's a good
right?
idea. Yeah.
Macron called snap elections, right? After his party lost to the far right vote for EU lawmakers. And there's a lot of speculation since the national rally or whatever it is that the far right party, who's led by
Marine Le Pen.
Marine Le Pen, yeah, is poised to move into the center seat, but France has a shitload of debt, right? They're sitting on 110% of gross domestic product as debt. And
So less than us.
yeah, but basically they're worried that if the right wing takes power, that the efforts to reduce that debt are going to be greatly upset, right?
Well, and so and there needs to be some clarifications here, because I'm sure for a lot of the freedom-loving hot dog eating Americans in here, they're like, wait a minute, but right wing means fiscally conservative. The thing is, in France, is they're trying to onshore a lot of labor, and to do so, the right wing wants to subsidize it. And further, just to step back a bit, the snap election thing is sort of like if Joe Biden decided after a midterm he didn't like the outcome. He just went ahead and fired Congress and said, "You guys are going to get elected again."
Yeah,
So,
kind of.
yeah,
Well,
it
yeah,
was very, very.
Le Pen's policy calls for huge government spending, right? It's what is it, France First agenda or whatever. And that could result in, an economic crisis essentially. We
Yeah,
saw a similar thing with Liz Truss in England with the gilts, right? Um, where she unveiled plans to increase borrowing, and UK government bonds just fucking crashed overnight. I don't know if you guys remember that from a year and a half ago.
Remember that.
Yeah, so that was and France is facing a similar thing now, right? And this is causing, a flight to safety and a huge drop in France's stock markets. But I think as of Friday, the Oats 10-year stood at 3.17, which is almost what is it? It's equivalent to Portugal. And then that's driving the spread between the German bonds, which are AAA bonds, right? Um, and that's creating a lot of fear that we're gonna be in for another EU debt crisis, especially if the right wing government ends up taking power.
Yeah, it'll certainly be interesting. Spending more money is always fun. I mean, I think this is just a larger symptom playing out of wealth inequality, right? But now the countries are blaming other countries instead of just blaming the wealthy hoarding all the wealth.
yeah.
So it's never take the money away from the wealthy. It's always just print more money.
Yeah. So anyway,
Crazy.
that's driving a flight to U.S. bonds, which, as we know, are kind of unstable from a value proposition, because although we did get those two prints of slightly softer inflation, they're probably not durable, right? It was,
Noise.
yeah, it was just a lot of noise. Because the seasonal adjustments were just way too severe, and we're looking at like what a really idealistic scenario for inflation that simply doesn't exist. And I think PCE is going to reflect that we are still feeling prices as consumers, in quite a significant way, and I think producers as well, despite both of those prints being soft, and that could lead to this big flight to U.S. bonds reversing really quickly. And I don't think that's going to happen this week, because I think this week we pretty much just have like housing data. We have PMIs into the back half of the week, and if PMIs continue to be hot, that's going to imply that we're still seeing expansion in all the sectors that are inflationary, right? We're still not seeing any productivity. Labor costs are still rising and continuing to fuel that inflationary bubble, and nothing's really stopped that. And I know shipping and gasoline costs have continued up despite them being adjusted out in the most recent report, and the CPI index is still rising, right? The non-adjusted index is still rising. So yeah, I guess we could go into a little bit of that with housing this week. Housing has been in decline, right? But it's not affecting prices, and that's kind of weird, right? We
I mean,
have
it's a market breaking down, right? Buyers and sellers can't find middle ground, and so the market just starts breaking down.
which would be some indication that the Fed's current rate is doing its job. It's just doing it very slowly. But also, house prices are staying elevated, rental prices are staying elevated. I think a lot of home sellers are just turning to the more profitable rental market when they're not finding, buyers in the sellers market, right? And so now we've got to wait for the rental market to get overcrowded and rents to start dropping. But that could take another 6 months to a year, right?
Yeah,
I don't think that's something that's going to move very quickly. In the meantime, houses just aren't, like, inventories stacking up, and houses just aren't selling. Um,
there are a lot of places like Austin, Texas, Florida, some in Arizona. Places that tend to do really well at the in market booms and tend
mhm.
to be the first to crack.
Yeah,
Are cracking pretty substantially. I mean, Austin's been cracking for a long time because they went up so fast because everybody from California, moved in and jacked the prices up insanely high, and so that's been correcting, but it's still in the process. But the Florida market might be at the beginning of an actual just full on crash. I mean, the amount of inventory on sale and the number of price drops is getting insane.
there's
And then
also
now
there's also
now
like
with
a
all
lot
the
of insurance issues with Florida real
yeah,
estate
there's
too.
a huge flooding that just occurred, and I
Yeah.
think Fort Lauderdale and some other places, like there's like over a foot of water in like all these homes. So now it's kind of the beginning of, I think, a full blown disaster. um, and honestly, I mean, it sounds scary, but honestly, that's kind of a healthy thing. You need this massive correction. The people who are going to lose are the people who own all these homes and we're speculating on them, and they need to lose. So, um, yeah,
Yep. Damn straight.
German bonds are called, they're Bunds. Bund. Bund.
yeah.
Yeah,
Germany has their own language. So they spell
yeah,
things different.
it's crazy. not buns. Anyway, so yeah, so we've been seeing the weaker home sales, and that goes along with this. You know, we continue to see an exceptionally weak consumer, and this is this is the Michigan household income expectations, right? They are now at the lowest level since 2012. Um, and a significant drop. A significant part of that drop was on
See,
Friday's preliminary report.
yeah, and this is the weird thing to me is how quickly it happened, right? I mean,
It doesn't happen. I mean, it generally does happen very quickly when it does happen. If you look at prior instances,
yeah, that's what I'm trying to do, but I mean, it's just so strange because every other time it happened, it's coming off of like a huge downtrend, but this one had like a quick downtrend and then a nice bounce, and then now it's downtrending. It's just very strange.
It's a
Yeah.
head
I
and
don't
shoulders.
I don't know how to feel about this one print. It is a very significant move. Um, but I'd like to see another print at least.
I'd
That's
like to
But
see an
fair.
yeah, this
expensive
is
cigarette.
definitely something to watch. It is kind of an insane move. It's so insane. It's a little unbelievable.
So yeah,
It looks
I
like a
agree that
2.5%.
it's an absurd move, but it's also kind of expected, right? We've seen several indications across all of the data sets that the consumer has been substantially weakening since the beginning of this year, right? We've got credit card defaults way up. Um, uh, so much that even JPOW commented on them for like the first time ever, right? Usually he just blows off any questions about consumer credit, and he was like, "Yeah, that's something we need to watch this time." And you know, we're also seeing that in auto loans, where you know the average fucking loan rate is at like 10% now. You know, and so revolving credit and auto loans are starting to fail, and we're seeing reduction in home buying, right? Which you know tells us that people are not in the majority of people are not in a stable financial situation right now. Wages are flat, productivity's still at fucking zero. I don't care what anyone says, it's at zero, right?
Yeah.
We're not, so people aren't making more money, they're not expecting to make more money, and their current financial situation is terrible. Yet, and this is where things get fun, one of your favorite metrics, and everyone's on the fucking rug, right? Like, we've got
Oh.
65% of U.S. stocks are growth, and allocations are near record highs. And this is equities as a percentage of total household allocation for Bank of America customers, right? And this is, you know, it's a pretty broad swath of customers. It's a very, very good, you know, statistically a very good number of people to be looking at, and everyone's loaded to the tits on equities, right? They're not buying houses, they're not buying cars anymore. They're just, yep, I know, yep, we can,
Put up. You got to put up the Disney character
yeah,
because you
that's
one, you
fine.
get demonetized, which is always fun, and then
Mhm.
two, it makes it more fun, right? It's a
Yep.
Disney character, right? She wants to be
Stocks
part of that
plus
world.
real estate over cash plus bonds is nearing all-time highs, but equities as an allocation already are at all. Like
Yeah,
you know, we kind of
yeah, yeah,
peaked a
yeah, yeah.
little bit earlier this year, and they're peaking again. 57% is nuts, right? And most of this investment is not in safe allocations, right? This is not money going into, you know, defensive positions. These are not utilities, these are not manufacturing industrials, these are not, this is all just tech and tech services. And you know, 57% of people's stock allocations and investment allocations are in arguably the most cyclical and easily disrupted sectors. So
It's almost
So
everyone's on the rug, right?
I
um
agree. I want to add one thing to that since we're talking about a lot of this is semiconductors,
yeah, yeah,
and it's something that I wish I had incorporated into my thinking more earlier was just the massive amount of money that's going into semiconductors from the CHIPS Act.
Yeah, well, let's
I
talk
mean,
about semiconductors and the industry trend in tech and how much is semiconductors because the rest of tech really not doing very well, right?
yeah,
We've got a small bump in tech like hardware, storage, and peripherals, right? But still below the long run trend. IT services are way below the long run trend, and communication equipment industry is slipping. But semiconductors, I mean, this has got to be the broadest gap in breadth in tech ever, right?
yeah, and I think obviously the AI mania is part of it, um, or a lot of it, but certainly I think another component to think about in terms of how much longevity this has is, I mean, you have to look at the CHIPS Act. I mean, they're pumping trillions of dollars into the semiconductor industry, a lot of it trying to onshore things, but they're pumping it into the NVIDIAs and the Samsungs and the Foxcons and the
Yep.
TSMCs, um, to do all of this in the US. And, that money's getting pumped quite broadly, actually. I mean, like workforce development. So you've got like retraining people. So like money's even getting pumped into like community colleges to get people, because it used to be that you'd have to have an advanced degree to do work in a microfab facility, but now there's a lot of technician work that happens where you don't have to be particularly well educated. You just have to be, you know, meticulous, thoughtful, and two legs and two arms, and half a brain. And
Yeah.
so, but there's just money pouring into this, and so asking,
Why can't AI do
I hate you so much,
it?
because we don't have anything that's artificially intelligent. We can also go into how ridiculous Elon Musk's idea of like these android robots being like the next big thing, how absurd it is. Like, just go on YouTube and type in like modern day manufacturing. A great one's like a BMW or a high quality car manufacturer, and just look at like their manufacturing line, which is now mostly robots.
Yeah.
Like, show me the robots that look like humans. Like, they just fucking don't. They look like,
There's no particular advantage to being human shaped
no,
as an assembly worker.
no, or to
Yeah.
do anything in a factory, right? It's
Yeah.
just really strange. And so if it's
What
not going in
what
factories, where is
Elon's
it
really
going?
promising the world is chat GPT level intelligence sex robots.
Yeah, I know.
And
I know.
that's I mean that's his most valuable idea to date.
That's fair.
I
I
mean,
mean,
I will
OpenAI is
pay.
trying to
Do you
trying
want
to
a
do.
smart sex robot?
I will pay. I will pay the price of a new car if it means I get a robot that can fold my laundry.
I know. We all know you want laundry folding. Everybody actually does. Everyone's just like, I don't want AI that writes poems and does art while I fold my laundry. I want to be writing poems and making art while the robot folds my laundry. Like, it's
And you
completely
fuck it,
backwards.
right?
Yeah, 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 yeah,
Yeah,
yeah,
okay.
yeah.
You,
Uh,
That
you guys keep leaving out the fucking the robot part, and I feel like that's 90% of the profits there.
well, I don't
Um,
know. Is this something that Roomba's gotten into? It seems like if Roomba hasn't gotten it to work,
Actually, my Roombas only fuck themselves.
yeah, that actually seems.
It's
Yeah,
it's a problem.
that's yeah, that's true. Um, I completely lost my train of thought there.
I'm sorry I had to
Oh
do
yeah,
that to you.
OpenAI is trying to ethically start making pornography,
Yeah,
deep fake
yeah. Well,
porn.
that way you have something to watch while you fuck your robot. until they can
Yeah.
get a skin on it.
Yeah, that's a sign that the AI is really going to increase productivity when you have no better ideas and just resort to making
I mean, I
porn.
think it's just important that we emphasize how ethical that porn's going to be.
It's going to be extremely ethical.
It's going to be the most ethical porn. No porn stars are going to be harmed in the making of Chat GPT's.
No future porn stars,
Yeah,
just the previous
only the
porn
porn stars that were harmed in the past will ever
stars.
have been harmed. And so all future porn will be ethically sourced and grass fed.
Yes, grass fed is very important. You don't want to grain feed your porn stars.
Yeah. And if
True.
you could really boost your ESG score by creating AI porn that's solely done with solar power, right? Like all of our
Yeah.
AI porn is solar powered. So we've come so far as a race that we've taken the massive ball of energy in the sky and we're going to convert it into something to jerk off to.
Yeah. In the meantime, no one's having any babies anymore because
And
we're all jerking off
how do
to
people argue that we
ethical
aren't
porn.
monkeys?
Well,
I mean,
monkeys
yeah.
are having actual sex, and procreating.
That's not
So,
true. I've been to the zoo. They spend a
well, I
lot
don't
of
think
time just jerking off.
that's true.
They're just not smart enough to create new ethically sourced ways of jerking off.
Yeah,
Yeah.
still doing it in public.
Yeah, they just do it for the thrill.
Doesn't everybody?
So
Anyway, all right.
back to everybody being on the rug. I think we should also talk about the fact that all of the uh all of the institutions are also just chilling on the rug with alongside everyone else because as asset managers, they have to buy all this shit that isn't semiconductors but also isn't running, right? And so they're over allocated to semiconductors because they have to be, but they're also allocated to like a bunch of shit they don't want to own at all. And this leaves us with CTA levels pretty near all-time highs, and very close to like the all-time highs seen into the end of 2021. Um, CTAs are now the net seller of all equities in all situations of like 13 billion, right? On a one standard deviation move, which is like 3.3% to the downside, they're the net seller of 60 billion in equities. And in the longer run, they're the net seller of 160 billion dollars in equities. They just want to dump, right? Like there's just nothing. There's no reason for them to hold them anymore. They're not improving in price. They're already at the top of their projected like 5-year PE. They're just bags of shit that they have to include in their funds, and they don't want to. And I think we're starting to see a little bit of that selling anyway, right? And that's one of the reasons we see breadth underperforming so badly. And it's really, really bad. Like
Yeah, it's shockingly bad.
yeah, it's we can take a look at this fun chart here, which shows the top 10 S&P performers versus the bottom 490 in a cap weighted index, and this is brought to us by FactSet and Fidelity. And you can see that there is a 2,100 point spread between the top 10 index performers and the other 490 stocks in the index.
Yep.
Sounds like we have room for breadth improvement, except nobody wants to buy more of that shit, right? We've just discussed the fact that all of those assets are underperforming. They already have bought more than they want. I have
Yeah,
calls, Greg.
everybody's all levered in, right? And it's yeah, we can talk about that in a minute. But yeah, I mean, people are already in a whole lot more than they want to be. So this idea that like, oh, there's room to improve, where's that going to come from, right? People are already over leveraged into equities. They're going to have to either lever more, like historically lever to like literally the tits,
They're gonna have to start
uh,
selling off
or
their
they're gonna sell
safer
something else, right?
investments to go
Yeah.
long equities. Yeah, which seems difficult when they can't pay for their cars. But part of the thing that has driven this beyond the scope, right, is that share buybacks of the S&P 500 are still nearing all-time highs, right? We're in a blackout period right now, so we're not getting the $5 billion a day in flows. But a lot of the CHIPS Act that you just referred to is going towards buying back shares, right? Any money they get their grubby little hands on, they're immediately buying back shares with it. And this has been probably more of a driver of the S&P price improvement than any of us would like to admit. But it is I mean statistically significant, and these buybacks are huge. Um, and I think during this period of blackout, this is probably when you get the best chance for some kind of pullback, because I mean they're just simply not buying $5 billion worth of shares a day. But every other day they are.
Yeah, it's a lot of fun.
It is. And lastly, I wanted to show this fun chart I found about food prices and where they're at now. And so
Yeah.
when we're discussing food inflation and PCE, this is what most of the PCE component charts look like. Is that we hit that wall in 2020, all the free money came in, and all the prices went up exponentially. And despite the tiny downturn that you might see there in like Canadian food prices, largely they're up everywhere, right? And they are, we might not be paying as much as like the EU and the UK for food, but we are paying substantially more money for food, basic services, cost of living than we've ever paid before. And so, I know a lot of charts, you look at it, you read a lot of economist reviews, and they're like, oh, inflation's coming down. Well, they mean it's not as high as it was at the top of this chart, but none of the inflation components are fucking anywhere near the bottom of this chart, right? And so I wanted to give some perspective onto what inflation actually looks like, and that effect on people, because it's really not. It's really disingenuous when you hear these people say, "Oh, inflation's cooling, inflation's softening." This is what inflation charts look like. This is the total, like, unadjusted inflation indexes over time, right? And this is, I believe,
All right,
indexed to 100.
Dirk. Without looking, what is a Subway footlong go for nowadays?
Oh man, I don't eat at Subway.
I don't either, but I went on their website and had to go look because I
They
was
used to be,
curious.
well, it was like they used to be famous for being $5, right?
Right,
I would
right. Like
assume I
like
would
for
I would
4 years
assume
ago.
I would assume like 11.99.
The specialty ones, yeah, are like $12. I
Okay.
think if you
Yeah.
get like a generic like turkey sub foot long, it's like 10.89 or something like that.
And wages have risen 4%, right? Just double checking, right? Meanwhile, our government, as of now, will be as of this coming quarter, will now be spending more on net interest payments than they do on defense. For the first time in U.S. history, I think our maybe since, well, the 80s. I think we crossed over a little in the 80s. This doesn't go back that far. Early 80s,
It's nuts, yeah. That's kind of a problem.
isn't
Did
it?
you did you
Someone really needs
I
JPOW to
f-
cut rates, right?
no, this
Because
was actually really great. I should find this link and post it again in the Discord. I forget. I apologize. I think it was Smooth Operator. I can't remember who it was. But someone showed me a link to this legislator who went on for like 45 minutes about like actually trying to fix the budget deficit problem, and it
mm,
it really hit me, like it really struck me as someone who like tries to actually solve problems. And then in this case, like you could tell he's actually trying to run the numbers and he's actually trying to find a
I think you
solution.
shared that link with me, or I
I
saw it on your
did.
Twitter or something.
Yeah,
Yeah,
and
yeah, I
I
did.
encourage everybody to watch it. I think he's a Republican from Arizona, but it doesn't really matter. I mean, I put the quote on the tweet that he said near the end. Is this Republican or Democrat? I don't know. It's just hard.
Yeah.
And that struck me because, that is the kind of person that you actually want in government. Somebody who's actually sitting down and not playing games and not like, printing out poster boards of Hunter Biden's massive
Hog.
hog.
Yeah.
Uh, like actually sitting down and being like, hey, we have to make the math, and it's really hard.
Yeah, I mean, there's
And
so few
one of the things
politicians that
he,
have any interest in solving problems. Most of them seem to just be interested in creating more.
yeah, but I think this goes to like this issue, right? I mean, yes, this is definitely a boy who cried wolf issue, right? I mean, the government has been spending more money than a lot of people are comfortable with for a really long time, and things seemingly are still great. And so, and then you have like the modern monetary theorists and other people who think that like there is no downside to deficit spending. Like deficit spendings are just good things. And I can see why people can believe that because we've gone for so long where both the prosperity times and the cure for bad times is just more money, more debt. And so far it feels like that's working, but this is not going to work forever. And it's happening much more quickly than people might expect. And it's kind of shocking that, I mean, you have politicians like Elizabeth Warren and others who are literally begging, who are sending letters begging the Federal Reserve to lower interest rates because they just do not have the capacity within themselves to balance anything. And we're at a point now where even if they cut, I mean, even if they cut to like 3.5% from where we are now, which they're probably not going to go much lower than that unless, we have an absolute like catastrophic crash. Um, like this is still going to be a problem. So it's not like, and this is what's so nefarious about these large debt values, right? I mean, things look good for a while, but it really kind of pushes you into a corner and backs you into a corner where if anything doesn't quite go as planned, you're so much more limited in what you can do and how you can maneuver these unforeseen situations in the future. And we're at that point where our deficit is so large that it is preventing us from being able to do things like create a stable economy with interest rates uh, and things like that. And so this is, yeah, I mean, it's really easy to look at this graph and say, okay, like we're probably fine for another 30 years, right? And maybe we are, like, who knows, right? But the trajectory should trouble everybody.
Yeah, I agree.
Definitely
And
crazy.
it's hard, right? When people are, look at this, their fucking financial managers are projecting 11 and 14% growth over the next 2 years, right? And
Yeah, you remember you
and then they
remember
believe
what
them
the
because we've now exceeded every single projected year-end target for the S&P.
some of them are raising. Some of them raised this weekend at 5,600.
Yeah, I know they did, but I
Wait,
mean,
Gert, with respect to exploding deficits and all this stuff, I mean, didn't I go on like a doomer rant with you like on a late night in like early 2022 about this shit?
dude, we've been on so many doomer rants about exploding debt.
Dude, like it was just so obvious. Like it's crazy, but like it's materializing now, and people are like, "Oh my god!" It's like, dude, like it's and Rubini was right when he called it out. He was totally right, and then he
Yeah.
bitched out of his call because it didn't lead to stock downs, right?
Yeah.
That was the big mistake he made, was saying that it was going to be a financial crisis, which hasn't materialized yet, and then he backed out before it ever got a chance to.
Yeah, I mean, I think that's been hard for a lot of bearish, or more contrarian analysts over the last 2 years, right? Is all the signs are there, all of the data points to the same things that we discuss most weekends, right? But equities don't care, right? And that's partially because the last two charts I showed you, right? Like everyone's still projecting the most bullish possible outcome, and a
Can you
lot
go
of
back to that chart?
that outcome is the growth one.
Yeah.
Yeah, absolutely. That's right here. But the
I mean,
growth outcomes are being realized, right? So it's not only is it being promised, it's coming true. And then every time that happens, more and more people are going to allocate more and more money to equities, and
hold on.
increase their risk.
No, Kirk. We've been doing this a long time. Do you remember? Do you remember, like, somewhere in quarter one, quarter two of 2023, what their projections were at the end of 2023?
Yeah, they were supposed to go down.
No.
Which?
The fourth.
Oh,
Remember
end
we were
of
talking
20
about
end of
fourth quarter 2023. They were projecting like 12% year-over-year growth,
yeah.
and they just keep pushing it out, and it keeps never coming true. I mean, we've had basically no growth for 3 years.
I thought you were talking about 20. They had projected down into the back half of 2024.
Oh, they did?
Yeah, they had at one point projected down into the back half of 2024. I thought, I didn't. 2023 was expected to hit 12%. Now 2024 is 11.1, which is up, I think,
Yeah.
from like 9.5.
They just keep
but
rolling it backwards.
But like, have you looked at earnings yields on SPX this quarter?
No.
It's dropped massively because all the companies are guiding down, right? But analysts are still projecting total growth is way up.
Would you say that you see the stag and inflation?
I would say yeah. I would say that I see both of those.
Yeah, that's what it sounds like to me.
Well, I can't share that, Jay Fresh.
What?
Although, as my financial advisor, I really wish you'd tell me to stop telling me so clearly to buy 5375 puts over and over again. I don't know how many times you're going to send me this chart.
No, I just updated it for. Oh, you're showing it, dude. Are we supposed to show this?
Yeah, well, too bad. They don't know what it means, so it doesn't matter.
Okay. Yeah, we just won't talk about where it came from.
Yeah, or what it does or anything. Yeah, I like that.
Well, it first showed up when I put it in my butt, and then this is what popped out.
Yeah.
But
NVIDIA guides up. Market guides up. But wait, all of NVIDIA's money comes from other people in the market.
Yeah. One company's.
So if NVIDIA gets $10 billion from Meta lost $10 billion.
But they gained so much more.
They didn't gain anything. They just got some chips.
They gained a ton of chips.
They got a consumer non-durable.
No. You're not understanding. So Meta gives NVIDIA $10 billion.
Okay.
Right?
Yeah.
So now NVIDIA has
$10
billion more money.
Right? Yeah.
Then NVIDIA gives Meta a bunch of chips that are worth at least $10 billion.
Well,
so now everybody's just up 10 billion.
Oh shit.
See how that works?
Yeah. I mean, wait, hold on. But
there's no logical way to refute this.
You're right. So now Meta's, I mean, they're not just up 10 billion. They're up 10 billion plus AI.
Right.
Which is 10 billion. Which
they're giving away for free.
So hold on, NVIDIA's losing money here because NVIDIA's giving $10 billion worth of chips to Meta, plus all of the future growth that those chips generate.
Yeah, Nvidia is so bullish on AI, they're shorting AI harder
They're
than
shorting
anybody else.
themselves.
Yeah.
Holy,
Nobody is more short on AI than Nvidia.
that's amazing.
God damn it. I hate this discussion so much.
Now wait, hold on. If Nvidia was that short on AI, surely they wouldn't be lending people the $10 billion to buy those $10 billion worth of chips with, right?
Oh, they are.
Oh, they do that?
Yeah.
Can we get some Nvidia chips?
Well, so Nvidia won't
Yeah.
lend those.
Step one,
Yeah.
buy Nvidia stock.
Okay.
Yeah.
Step two, raise a bunch of money to buy chips, partially from
From Nvidia.
Nvidia.
Yeah.
Buy the chips, help them meet their guidance or exceed their guidance. You've paid $1 billion for chips, and your Nvidia holdings just
Well,
went
hold
up
on.
$100 billion.
Did I pay anything for Nvidia chips?
Well, no, yeah,
Ah.
Nvidia did.
Oh, interesting. So Nvidia's capex is being multiplicatively added to their revenues.
Yeah, for every that's the thing. Their multipliers are just shooting through the roof, right? So for every $1 billion of chips they sell somebody who owns Nvidia stock, the people who own that stock gain
$1 billion.
three to $10 billion. So it's just a money
And then you
maker.
could use those profits to buy more chips.
Yeah. How do you think CoreWeave went from buying $20 million worth of chips like a year ago to now up to like 7 billion?
That's a $1 trillion cloud services company you're talking about.
I know. They're
Wait.
expanding. Yeah, a
This
bunch of
this
a
all
bunch of energy traders turned crypto miners turned AI infrastructure. Yeah.
Yeah, the CEO is a former CTA. So I
Yeah.
mean his knowledge of complex machine learning algorithms is obviously top notch.
Yeah, if you want to
From
make
all his
money,
time jockeying a desk for JPM on futures contracts.
raise $2 billion, buy $1 billion worth of Nvidia chips,
$1 billion
and
worth of
then
Nvidia shares.
$1 billion worth of Nvidia shares, and the net profit on that is risk-free $8 billion.
You know what? This all sounds a lot like a story I heard about a dude who ran a
Natural gas
convenience
company
store.
in Texas.
No, this random dude who ran some sort of like electronics store or something. You know the ones like with the cheap electronics on the side of the street
Yeah,
in New
like
York.
Radio Shack.
Yeah, and he was able to get really big loans because what he was doing was buying his own inventory when it wouldn't cycle through, and then he would just leave it on the shelves.
Oh, okay.
But
You want to
he
know
went to
something?
jail.
If this ends up becoming like a thing, I'm gonna say that the universe is a simulation. Do you guys know what stock replaced Enron in the S&P 500?
Nvidia?
Yeah.
Yeah. Seems perfect.
And
Wait, does that
it's
mean that GameStop is going to be the stock that replaces Nvidia in the S&P 500?
yes.
It's the only
I don't
way.
know. I don't know. I just want somebody to explain to me what an AI factory is.
It's
If someone can do
well,
that,
hold
I'll
on. I
go.
could do that.
Wait, I'll
It's
do it first, but JFresh, give me $500,000 a year for 10 years, and then I'll explain it to you.
mm. I feel like we could just instead of selling data to people, right, and having this like platform built for retail traders, we could just buy some H100s and then get loans on
Well,
some
what
H100s.
we need to do is here's where we're screwing up
Hmm.
is we haven't put in any AI tools into our platform.
Oh, that's how we get the investment. That's how we get the first $1 billion. I'll
Yeah.
start training the chat GPT on myself right away.
Yeah. We
Yeah.
just need
I'll just
just
feed
get
it all my
ChatGPT to
YouTube
watch
videos.
all of your YouTube videos. Exactly. Yeah.
Yeah.
Gherk GPT.
Yeah.
Well, yeah,
Gherk PT.
The thing is though,
yeah,
is that
exactly. Me GPT.
you would be violating Google's terms of service on YouTube, but they have definitively shown that they don't care that you do that, because OpenAI has done that, and they turned a blind eye because they're also doing it. So that means
Yep.
we carte
That was
blanche
the most
right from
brilliant
YouTube.
chess move of all time by OpenAI. Just like, hey, they're violating their terms of service. Let's do it too. We need that data.
Yeah.
Let's do it too, and then we can take it to the Supreme Court, and if anything, we'll bankrupt OpenAI.
Just tell us where GM is on SPX, and we can buy 30 GTE puts when we get there. Yeah, I guess let's cover our market
Yeah.
analysis. So we've gone through all the data. The economy is still largely fucked. But things are bullish. So should I draw the diamond top or no?
Yeah.
No. All right.
It's just a joke.
We were all
It's
wrong
just
this
a
week.
sick joke at this point.
Did I make a prediction?
You did.
You did.
Yeah,
I did.
You drew a flat line that went up and down slightly.
That's right. It was like a $15 range or something.
Yep.
Well, me being out of town did cause the market to make a big move, but sadly, none of the bingo card squares were hit. So nobody got bingo.
Where is Gamma Max this week?
On SPX, it's at 55.52.28.
Well, we could look at my super duper better version.
Fuck you. You dick.
Sorry.
You ass.
55.
What are you doing to me, Jacob?
Yeah, it's like 55.10, something like that.
So bearish. Why are you so bearish, dude?
What do you mean?
That's like 100 bips lower than mine.
Well, I don't know.
We have a holiday this week too, don't forget.
On Friday?
Wait, when?
Juneteenth.
Oh, Juneteenth. What day are we celebrating it? On the day or
on the 19th?
Wait, the market's closed on a Wednesday?
I think so.
What the fuck?
Yeah.
It's weird.
That's how it works,
Dude,
right?
There's going to be so much settlement fuckery around that on a Wednesday. Actually, I guess not really. There's only on a Friday is there tons of weird shit going on that.
This is the perfect opportunity to get ready and crash the market, right?
I guess.
When all the settlement's going to be deferred out 45 days after the market's fully recovered.
Oh, right, yeah. You're a genius, Gert.
I know.
Yeah, I guess we are heading into June OPEX, guys. This is a quad witching.
Yep, it is.
So I get
and
right?
Rule number 1 about market crashes is
they always happen after OPEX.
Exactly.
And they tend to happen on the quarterly OPEXs as well.
They do. They do have a they happen on both, but they usually do veer, the majority veer towards the quarterlies.
My body's ready.
Nuke is just going off.
This thing looks ready to bust.
Here, you better calm down, Nuke. I'm going to put you in a corner for a little bit. There you go. Take a little bit of time.
We hit new all-time high contract values on the options market this week. That's fun.
Since no one won, I guess I'll go first.
Yeah, go for it. Okay, yeah. Can I go first next week though?
Sure.
I know.
Oh wait, no, you can't.
Yes.
Fuck you.
You already
Fuck
said
you.
yes.
No.
You already said yes. Shut the fuck up.
I know what you're gonna do, you son of a bitch.
You already said yes.
I'm just gonna draw the same line as you next week, but $100 lower.
Lloyd.
I'll tell you right now. Next week, I can't miss the opportunity to just draw a flat line after OPEX.
Oh, you're such a bastard. Yeah, next week's predictions are gonna be so funny. If I don't go first, Girk, and you get the prediction, I'm Okay, I already have a plan. So you're gonna hate mine even more.
Probably.
Just do $1 below whatever the lowest one is.
It's okay.
No, because
Dork's going first next week. That's fine.
Okay, perfect, sweet.
All right. J Fresh.
Wait, I thought you were going. Oh, you already went.
I already went. I did.
You
Mine.
did a little another dippy do, a little up, a little down. Why did you pick that point to go down?
I liked it.
Not based on any data or anything.
No. Well,
Yeah.
Fridays is PMI.
All right.
I think PMIs will still
So
be
yeah,
hot.
I mean, if you look at a lot of crashes, they do start to turn before they drop. So we can't just like keep going straight up into like a big drop. And also, I can't get out of thinking the Keynesian beauty contest. Everybody's going to expect it to happen next week if it happens. Although everybody's kind of in the summer of George, whatever the hell that is.
Interesting. Who's George?
I had to actually look it up, which pained my heart. They're just memeing George Costanza from. It's the
All right,
summer of George.
should I go next, J Fresh?
I'm gonna go. I'm gonna go. I do think we're going to go to 54.50 at least once. So I'm gonna say up to 54.60 tomorrow.
Okay.
And then we're gonna end the week at 51.50.
Holy shit.
I'm doing another one of those.
I see that. Is this gonna be your projection every week?
Yeah.
Because
Next week I'm gonna predict flat.
Oh, okay.
Because it's OPEX.
All right. Do you want to somehow keep it in our current price range, Dork, or no?
Yeah, I can. Mine's gonna be relatively tame compared to that.
Okay.
So, we're gonna go to 50. Okay, so, just open flat on Monday, totally normal. But by Wednesday, we are gonna close at 55.10.
So Tuesday afternoon.
No, close of Wednesday, 55.10.
There is no close on Wednesday.
Oh, you're right. Okay, yeah. So I guess close on Tuesday, 55.10. And then close on Friday, 55.52, 28.
55.10.
It's data driven, bro.
And then what was it? 50.
55.52, 28.
Are you just going to the JPM collar or what? Oh no,
I'm going straight to Gamma Max for quarterly OPEX.
All right.
Interesting.
And then
so once again, our predictions span in an insanely wide range, and none of them will be true.
I hope I'm right.
I hope I'm right, because if I'm right, then I'm also going to be right next week. That's how statistics works, right?
Sure.
All right, let me screenshot this for the.
Wait, hold on. Let me zoom in before you do that.
Oh yeah, good idea. Yeah, we got to make sure it's not. They know our actual price levels because people trade on this. Totally.
No, just for us to know who's more specifically correct.
All right.
I mean, we all know I'm not going to be correct, but the girl can dream.
Oh, wait, hold on. That's not right because the days are wrong. Hold on.
Oh, God. What are you doing?
The days were off because there's only 4 days. So I had it like in the middle of Thursday instead of beginning of Thursday.
Gotcha.
What does Bulgurk think? It's this line, but like it just keeps going like this.
I'm not including Bulgurk. That's fake news.
That's Bulgurk.
So here's another thing to keep in mind. This is an interesting data point. So I try to look at like how the options delta is distributed about the market,
Yeah.
and sort of like over the past year. So I have like the SPX index, and then I have, the meme 7, and then I kind of have everything else. So everything else has been around like 11 to 12% of the market
Mm-hmm.
for quite a while, and then now it's currently just under 10%, and it's a meaningful drop. And of course, a lot of that's being sucked up by Nvidia, but yeah, it's just really interesting that like the market's really. So I said the other day the ass is falling out of the SPX. It really kind of is. It's all just Nvidia and index options.
Well, the thing is, JFresh, is that SPX got dumped like a truck. So I mean, there's a lot of ass to fall out before I think we
It's
see anything
true.
crazy.
2,900 or bust.
There is a diamond top that breaks down like Monday.
If you draw that diamond top, it's not going to break down.
I know,
How
that's
many
why I'm
diamond
not
tops?
drawing it.
How many diamond tops have you drawn in the last 6 months that broke up? All of them?
Well, the last 3 I drew broke down.
By
That's
like
interesting,
100,
right?
not even 100 bips,
Well, this one went down like 500.
and then recovered almost immediately. Oh yeah, that one.
Yeah. This was also a diamond top. And that broke down like almost 3.
Just
Yeah,
like
so we
heavy
got
stuff, everything's diamond top.
we just broke a new high. So the last high delta on the market was 4.4 trillion, and we just broke that 4.48 trillion
Jesus
this week, and
Christ.
so I expect that to probably go up a little bit more into OPEC. So we might break 4.5 trillion going into OPEC, which will be the highest ever. It'll be fun. Also, the value, the actual just value of those contracts, also went to a new high of 675 billion,
Jesus
where
Christ.
the average last year before we got like 2020, the pretty much since October of 2023 till now, when everything just went bonkers.
Just tell me
The
this. How
average,
much does the hedge drop on the bid if we fall through the short calls between 5,400 and 5,300?
I don't know, man. It's gonna get messy if it happens.
Right.
But it's just really weird. We're kind of in a nice little nest here. We had like a little pop of positive calls that we're sitting at that sort of created this little gamma cradle.
Yeah. A little pocket.
And
Poly pocket.
yeah, yeah. And then there's still all those like massive sold calls above us. Um, so yeah, I mean, it's kind of hard to say. I mean, if anything, this week would be the flattish week, just because of that little pocket. It's going to protect, because a lot of gamma comes in on the zero DTs, and there's going to be a lot of sold puts. The sold puts tend to sell a little bit more at and in the money than the sold calls, which is what sort of pushes us up throughout the day. Why we like slowly grind up from like 11 o'clock on. Um, so yeah, I think that's going to create a nice little pocket that's going to keep us just right here. And then, if the ass keeps falling out of the SPX while this keeps going up, it's eventually just that would be the bigger sign than anything for me that after OPEC something bad could really happen. If we just stay kind of flattish here and the ass keeps falling out,
Yeah. Yeah, the bleed
that
in breadth is frightening.
well, yeah, I mean that's why CNN Fear and Greed says fear right now, even though we're pushing all-time highs, because breath is in the toilet.
Yeah. Well, that's
which
also
is
junk
which I've been.
bonds too, right?
Yeah, I've been told it's bullish though because leaders always lead into new highs.
Mm.
So just wait for everybody to pile into everything else because they're not already all piled in.
Perfect.
Yeah.
All right. Well, I got to jump off. My
Yep.
girlfriend's brother's here, so.
Yeah, it's Father's Day and I'm neglecting my children. So,
Smart.
although
Perfect.
it's supposed to be about me.
Exactly.
All right. So flat this week and flat next week.
Straight to GM this week, and then straight to below Vana neutral.
Or we just keep going up. We're gonna hit 6,000 by Thanksgiving.
Tom Lee is our Lord and Savior.
Praise be.
Wow. This looks a lot like 2020.
Don't do that.
I mean,
Don't do that.
Don't do that. It's like a way worse version of it because we have a lot more money than we did back in 2020.
there's some. It also kind of looks like the end of 21.
It just looks like a monstrous pump to the moon.
Yeah. That's awkward.
You just call it that. Let's not start comparing past performance and correlating
Future
future
results.
returns. Let's just call it a massive fucking pump to the moon like it is.
Hey, you're just not appreciating how much AI is going to transform everything.
We still haven't hit the long run.
Apple went up, what, 13% in 2 days?
We should be able to hit 6,500, right? If we want to test the long-term trend. Like the weekly trend from the top of the Black Friday, right?
Yeah, the weekly trend from when.
If we go from Black Friday to now,
now,
we should have a little bit more room.
I think
it was Black Friday and then the peak of the .com bubble, and then the next peak should be like 5250.
I think that the amount of investors that were alive during Black Friday is exactly 0.
But it doesn't matter. Their top is what matters, right?
I mean, they were, the trusts are probably still around. Some of them.
They secured a legacy. That's true.
Yeah.
Yeah, Jinjin, if it makes you sick to think about up through Thanksgiving, you should at least be prepared for that possibility, right?
This is the most bullish thing I've ever seen. Hold on.
Q4 is generally bearish, but based on what Gert's showing me here, I think we go to Jackson's
what did you say? Q4 is generally bearish?
Generally bearish.
Do you want to say the variance is larger than the mean?
He forgot the Santa rally. That's okay.
True, the Santa rally. I forgot about the Santa rally. Darn it. You see, Gert, you should throw it on a linear scale. It makes it way more exciting when it's on a linear scale.
The statistically perfect Santa rally.
Exactly.
That's all that matters. All right, I gotta go.
All right.
Thank you guys so much for coming on. I'll see you guys later. Enjoy it. Happy Father's Day, Jay Fresh. Happy Homeowners Day, Doric. I'll see you guys later.
I'm gonna go enjoy my landed.
Thanks for coming on. Later, guys. If you have any questions, you didn't get to them on the stream, feel free to ask me over on the Discord. I should be around for the rest of the day. Pickles Picks will be out tonight, and I will see you all tomorrow morning. Later.